Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so what do we have on the docket today? We have some action in the pre-market. Bitcoin is looking to bounce back. We're seeing NVIDIA also bounce back. Notice how those two things are bouncing together. To me, that's something that I'm taking very close note of as we get into trading today and even for future days. Economic news a little on the lighter side here until later in the week when PCE data comes out, but we do have some stocks that are on the move today, including Carnival Cruise, which reported earnings just this morning. After the bell today, I believe we have a couple earnings reports, and then also tomorrow is Micron after the bell. That's going to be the big one, right? That's going to be the big one in terms of these semiconductors. All right, on that note, let's get right over. There you go, Tim. Good catch. Throwing golf clubs over here. What can we do? So first and foremost, folks, we're going to get into the pre-market action. We're going to look at the futures. So S&P 500, this is where we closed. We had that big kind of end-of-day sell to bring us down significantly. We then, in the after hours, kind of went sideways here. And then pre-market this morning at 4 in the morning when the S&P or the spiders opened for trading, we have seen a slow float to the upside. Now, this float likely is because of NVIDIA. NVIDIA, which started out a little weaker pre-market, is now up a few dollars on the morning session, getting a rebound. We'll take a look at that chart in just a minute. But ultimately, the big question here is, and this is if we flip back to the daily chart of the SPY, we can see very clearly that we were into key resistance. And you can see, again, the trend line. Trend lines are amazing, folks. I literally use them more than anything else. So many people out there use these crazy kind of indicators and stuff like that. Simplicity. Keep it simple. It's much easier to read and understand, and it works. So you see this level right here. We bring it right up to here, this high here, and then right to this high here. Now, one of the things I want to talk about here is what's called the blackout period. Now, the blackout period is a period where these companies that are traded in the S&P 500, the NASDAQ 100, etc., they go into blackout periods when they get close to reporting earnings. And what we can see is very clearly the blackout period for a majority of S&P stocks started last quarter right here, okay? Now listen, by the end of this week, we are going to have over 50% of the S&P companies in a blackout period. All right, what does that mean? Well, all of a sudden, notice this. We're coming literally up to the same date as right over here. In fact, this was right at the end of March. This is right at the end of June. And notice what happened. This was our biggest corrective move when a majority of companies could not buy back their stock. And again, think about how crazy that is. Does that mean that a majority of this upside is because there's literally $1 trillion a year being bought in terms of their companies buying their own stock back in buybacks? We know that Google announced a massive one, Apple announced a massive one. Almost all of these companies are announcing these massive buybacks, and there's this period of about 2 to 4 weeks where these companies are not allowed to buy back their stock. And interestingly enough, to draw this conclusion, it coincided with our bigger dip in the markets before the period passed, the blackout period was passed, and then what happens? Market goes right up again. So the idea here, and I'm just proposing this thesis, is that we could be starting a bigger move down, something in this range. I think this one was about a 5 to 6% correction. Not that big in the scheme of things. But again, are we starting that because of the earnings blackout period that is starting basically this week? And like I said, by the end of this week, we will be at a 50% or greater amount of companies not able to do their buybacks at this point. Okay, so again, the thought process is that could be something to watch. In terms of downside, I do want to show this chart level. We take a trend line from this pivot low to this major pivot low. And if we do that, what level do we get? We essentially get a trend line here. That would be my first big level to watch. Now, I do have a gap fill on here right here. This is a gap fill. It's only a level for more day trading, I would say. It's not a level where I would be interested in swing trading, but nonetheless, it is a level to watch, okay? All right, let me just get rid of this line here. I want to get rid of that so we really just see the purity of these two lines. By the way, this is called a wedge pattern. Wedge patterns are important because if price breaks the wedge pattern, it usually gets a bigger move. Now, again, you can see a wedge is essentially a triangle type of move like this. So you have wedges like that, you have wedges like this. I mean, there's lots of different wedges that occur, but the idea is that whichever way you break on them, you get a big move in one of those directions. So, as a trader, as an investor, what I'm watching is, okay, we're coming into a blackout period in the markets. Do we come down into this level? And the question is, does that hold? And then maybe we start the next move up when these companies can buy their stock back? Or do we just get a small bounce and then a bigger breakdown here on the S&P 500? All right, so again, just to show you, by the way, a good example of this, take a look at the DAX, which is the German stock market. And what we could see here is this had a very similar, what we would call a wedge pattern. And what we could see is we've now broken the wedge pattern right here. Now bear flag, that's a classic bear flag. And my guess is the DAX is going to head lower. But notice again, this is essentially what we could be looking like. If we could speed forward 3 months on the NASDAQ or the S&P, this might be the chart. It might be a leading indicator of exactly what could go on. Same general pattern. The only difference is this one has already broken. The S&P has not. It's still stuck within that wedge pattern. Okay, so that's a little tidbit of knowledge there on the charts. Flipping over to the NASDAQ 100 here, the QQQ, we are seeing a little bit better gains here pre-market, and this is a direct result. And this is the 10-minute chart. So we were on the dailies before. Now we're moving to the intraday, just looking at where the NASDAQ is holding. And we are seeing, again, the NASDAQ 100 bouncing back a little bit better than the S&P because the NVDA charts and the semis are more in the NASDAQ 100. Looking at NVIDIA real quick. Here's your daily chart of NVIDIA. I think I showed you guys this yesterday, but if we do see a corrective move that continues, this level here is your major area of support, around $95 to $97 per share. Still a long way away from that. We closed at 118. It did get down in the pre-market this morning to 115 and change before rallying back to its current levels of approximately 121. And again, if we flip from, this is the daily again, we're looking at the daily chart. Now we're going to flip over to the intraday 10-minute chart. And you can see that again, if we show the pre-market data, you can see a nice little bounce. We're trading just above 121 after closing at 118 yesterday. Okay? Or yesterday, right over here. All right, so that's something just to keep an eye on here. Again, the big thing you're watching for on NVIDIA as a technician of the charts is simply, are we going to see a surge right back up from the daily chart back and make new all-time highs? Or is it going to be a bounce or a bear flag, which then creates a move down to make lower lows? And that's really what we're watching for here on NVIDIA, right? We have an engulfing candle, which is a topping signal. We confirmed it the next day. We followed through the next day. So you've had 3 days of follow through. If you know your methodology from that I teach here at Verified Investing, a 3-bar surge like this does tell you you likely get a little bounce. But then what you're watching for is, here's your high, and we'll just redraw it here. We drop down. Do we get a bounce and a lower high and then a lower low? Is that what's going to happen here, right? Lower high, lower low, right, like that? Or are we going to instead, let's bring this back here, are we instead going to go up and make a higher high? And that's the determining factor. So essentially, you have what I would call a bearish reversal, but now we want to see if there's additional factors by making a lower high and lower low. And that we won't know, honestly, for that in the next, we'll probably know in the next couple weeks, not something that we'll know today necessarily. Okay, now again, if I'm correct and we see a bigger move down, this is going to be your first major support right down here. Notice again, flat top, there's a gap fill, upsloping trend line, they converge. You always want to find levels, and this is a little tidbit of insights into trading and investing. If you're using charts, don't just find one level and be like, oh, well, I believe it's going to go up or down, so I'm going to use that one factor. Find 2 or 3 factors, and then it really solidifies your thesis. Too many people kind of say, oh, well, I want this to happen, so let me just find this. Oh, that kind of shows me that it'll happen. Okay, I'm going to believe in that. And it's like, then they wonder why they're wrong. And listen, it happens to me all the time, frankly. It really does. So it's about really understanding and looking for 2, 3, and more factors that point to your thesis. Like imagine you had to stand in front of a group of the top technicians in the world and say why you wanted to buy a stock based on charts. You can't just go up there and say, well, I think it's going to do this or that. It's like, well, what are your 1, 2, 3, 4, 5 factors on the chart? And that's what puts you in a position to have 80% success or greater. All right, let's go on to a couple other charts here real quick. SMCI is one of them that just continues to amaze me. It is getting a small bounce today, but I just love the aspect of looking at this chart. You got your head, you got your head and shoulders pattern here, right? Clearly drawn out here on the chart, shoulder, head, and shoulder. The breakdown, and then notice the parallel lines, perfectly parallel lines, mind you, right here with the neckline. This is called the neckline right here. All right, and that extends out, and literally every time you retrace to the neckline, it was rejected, and then every time it came down here, all along here, it got a bounce. The question I have is it going to come into this level and bounce and then break down, in which case that would be quite the move down. SMCI could go to the 500s if that happens. So really what you're watching for, this level right here, around 7, it looks like 780, 785. Break of that on a daily closing basis with confirmation would really send this thing likely lower over the coming months to in the 500 range. All right. A couple other charts here on the morning docket. I did want to touch base on Chipotle. The reason Chipotle is interesting, today after the close, going into tomorrow, the stock will split 50 shares for every 1 share you have if you're holding this. But look at the channel. Look at the beauty of this channel here. Very clear. Parallel channel. Again, why does this happen in charts? Don't ask me. I just know it does. It has something to do with human psychology, probably algorithms as well. But the idea is you're now down to the low end coming into the stock split. Does it bounce here, or do we get a small bounce and then break down or just roll over? My guess is, based on valuation of this and what I've seen from other fast casual restaurants, I don't think the valuation makes a lot of sense if the consumer is really pulling back like we've seen with so many other fast casual restaurants. So eventually I do think this breaks sharply lower based on the valuation. I think it ran up quite a bit going into the stock split because of the hype. It's eventually going to have that sucked out. But let's watch the channel. The channel will tell us everything. Whatever I think honestly doesn't matter. It's what this chart tells us. When this breaks, game on to the downside. If it holds, benefit of the doubt, back to the upside. Just what it is, right? Lastly, quickly looking at this chart of CCL, which is Carnival Cruise. This is pre-market. It is trading down on the back of earnings. So they reported earnings this morning. The stock is down pretty decently here. Looks like about, I mean, I guess it's not a huge move. It's about 50 to 60 cents, but it's only a $16 stock. So decent little move there. I don't think I have any levels at this point unless we get down. Looks like if we got down to potentially 1520 area right in here, you could see we have this area right here with this area right here and this area right here. So if price came here, there might be a little bit of technical support there, but let's just keep an eye on it. I'll be trading it in the Apex Live Day Trading Room. Yesterday we were 5 for 5 in the Apex Live Day Trading Room. Amazing price action in there, just knocking it out of the park with the day traders that are in there. And by the way, just a little heads up, you don't have to be in there 24/7. Basically, the first hour and a half is when I would say 95% of all the trades are in the Apex Live Day Trading Room. So you need basically 9:30 to 11. That's the zone right there for the Apex Live Day Trading Room, and you'll catch about 95% of the trades. It's pretty cool. All right. On that note, we're going to spin the wheel of appreciation. Let's do that right now. Yesterday, we landed on smart money stocks and ETFs, which again is a service I run, giving out trade alerts, twice daily videos on analysis. I already had put out my morning video this morning, all of that fun stuff. And again, that's at verifiedinvesting.com. Let's spin and see who wins 3 months free of this, and then we'll spin our wheel and go right into Bitcoin and the other commodities out there. All right, the winner today of Smart Money Stocks and ETFs is Trader Deck here. Trader Deck here, great job there. You're the winner. Reach out to Lawton at Verified Investing. He'll get you all set up. And on that note, folks, follow me over here. We're going to spin the wheel of appreciation and see what the winner gets today. What? Oh, smart money commodities. Man, the smart monies have been landing recently. I think this is the third day in a row, if not fourth day, we've landed on the smart money. So 3 months for the commodities service, my commodities service. By the way, palladium, if you didn't see that move yesterday, we closed out in that service a half of the position for almost a 8.5% gain. Amazing move on that. We talked about the hedge funds getting squeezed yesterday. It was an awesome trade, but that's what we'll give away tomorrow. Smart money commodities. I'll even throw the little marker on there so we remember tomorrow. Now, what I want to do, guys, is take 30 seconds to thank iTrust Capital. Don't forget their link is below. You want to start an IRA, put crypto in it, whatever you want to do. They are your go-to for this stuff. So again, smart money, smart money goes to iTrust Capital. All right, here it is.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back. So one little mistake I made, no longer does it go to Lawton at Verified Investing. Make sure you email support@verifiedinvesting.com. All goes into that email right there. So support@verifiedinvesting.com. All right, into Bitcoin's chart. Check this out, guys. Amazing price action here. So we saw Bitcoin confirm. We know about this. I went over it yesterday. What is the confirmation signal? I literally taught it to you guys in yesterday's game plan. And what we could see is we confirmed, and then the breakdown really occurred. We went right to this level here, this orange trend line, which connects through multiple pivot points going back. We pierced it yesterday, getting as low as about 58,000 before now bouncing back to 61. Notice how, again, if I zoom in on this, let's do that right now here. If we zoom in on the price action, look at how it pierced this line here, but by the end of the day, it closed right back at or just above it. That's always bullish when that happens in the short term. Listen, it doesn't tell us where it's going to be tomorrow, but ultimately short-term bullish, little bit of a bounce right here. It's holding that support. I view this support as only minor, though. All right, what's the difference between major and minor? It's the amount of hits of a trend line, how far back the trend line goes. A trend line that goes back 20 years is obviously more powerful than a trend line that goes back 3 days, right? That's the idea behind it. All right, so just a little education there. Now, just looking at this chart, if we do break lower, which I eventually think we do at this point, you have to respect this 5650, 56,500 level to 57,000. That's this pivot low right here. But I'm still in the camp now that once we broke, remember, I was neutral to bullish on my bias as long as we stayed above this line. But once we broke that, the charts are in charge, right? It's not Charles in charge, it's the charts in charge. And that's the key, is once that breakdown occurred and we confirmed, then it takes away that bullish bias and you just have to accept it. Like, you may not want to, I may not want to, it is what it is. And that's the beauty of the charts. The charts aren't biased, folks. The media is biased, social media is biased, we're all biased, but the charts aren't. They are what they are. And it's up to us, the good traders, let the charts tell them what the charts are saying. We don't tell the charts what they're saying, and that's the key. Okay, so a little bit of a bounce on Bitcoin here. Secondary support will be right here if that breaks, followed by major. This is major down here, guys. Multiple trend lines converging. We talked about how important that is when you have multiple trend lines converging. It means more support in this case, and that would be your big level. Doesn't guarantee that we're going down there, but that would be a level where I would absolutely be a buyer should we get down to that zone. Now, would I go all in there? No. First of all, I never go all in on any position that I start. I nibble, and I nibble because I've traded long enough and I realize that I'm wrong enough where it doesn't make sense to go all in, because then you're handcuffed. You literally don't have any money left to maneuver. The more maneuverability you have as a trader, the better you will be as a trader, right? Maneuvering is everything. Like, think about it if you were in karate, or if you were in a fight, right? And if someone handcuffed you for that fight, like, what good are you going to be? You're going to get butt kicked. All right, now if you're totally free and you've practiced and everything like that, you have a much better chance. That's the idea. Same thing in trading. Be free. Don't be handcuffed. All right, don't be hogtied. You got to be able to maneuver. That's why going in light in your initial starter position is good. Now, does it stink when you're right? That, all right, let's say it comes right here and it bounces and you only went in a quarter of your position. No, it doesn't stink. You're still making money. Don't be greedy. right? I mean, like, people are ridiculous. Like, oh, but if I only did that. Well, you know what? If I only knew yesterday's lottery numbers, I would have won 100 million too. Like, okay, big deal. Money is money. Build it over time. But again, by going all in there, if it goes down, let's say to 30 in a crazy scenario, you're screwed. Can't let that happen, folks. It's all about being defensive as a trader. That's how you're going to make the most money. I know it's weird, but offensive traders that go all in on levels, they're basically gambling that that spot is it and you're going to make money. And maybe sometimes they do, but what happens when they don't? They get wiped out. Okay. All right, so let's keep going here, guys. Ethereum, there's not much to talk about on the ETH chart. Just holding above this first little level right here. This is my zone right here, $31 to $3,150. That's your key level. It did bounce off of this first minor support, but again, nonetheless, look at the pattern. Bearish pattern, little down move right there. Let's go into gold's chart real quick. Gold, I have some interesting stuff for you today. So remember, yesterday we were talking about the simplicity of this chart, where basically we had this little bit of a channel, which was bearish, right? We talked about this, right? So here's your bearish channel. All right, big wide range candle down, inside bar. We tried to break above it, didn't do it. Bearish bias, no doubt about it, short term. Bullish long term for me on the bigger chart time frames. But then what I was doing this morning is I was actually looking and I was like, wow, you know, if we curl over here, we actually have a head and shoulders, which is a bearish pattern starting to form with a neckline break right here, which interestingly enough, check this out, guys. If you calculate the target of the down move and you replicate that to a target, and this is how you calculate targets of head and shoulders. I teach this in the Winning Trader series. But basically what you get is a retrace to the scene of the crime at around 2100. And remember, 2080 was that big breakout we experienced. So if this actually plays out, and I don't know if it will, but if it does, you might get a chance to buy gold back around 2100, which would be quite something. I know for me, I'd be grabbing it decently, not going all in, of course, but decently grabbing a good position there. Looking at silver real quick, let's bring up the silver chart here and see what we got on that. Silver, again, is tapping on this little bit of a intra-channel trend line right here. My thought process is, based on this move, see how it just keeps on going like that? We'll probably break there and come down here, and then that's where I start to nibble lightly. And I stress lightly because I still think this could go a little bit lower, but it's staying in the channel. I'm respecting the channel. I'm looking to buy at the lower end right there. All right, a couple other charts to go over. We'll quickly go over oil. If we look at oil, oil still has a three-peat of trend lines converging between $82 to $83 per barrel. It is very close, but it's not there yet. If it gets up there, I think that's where you get your next big wave of selling, which probably even eventually takes us below this low around $72 a barrel. And lastly, natural gas, folks. Let's take a look at natural gas here. Oopsies. And I think I just shut off my screen here. We'll have to bring it right back up. There we go. So if we look at natural gas real quick, and we bring that chart up. Natural gas, look at this, guys. This is actually really interesting. We have a trend line, an upsloping trend line. We broke below, okay? Then we retraced to the line. Now, it's still unconfirmed, but still respect the resistance there. It's minor only, but then you're getting a little down move today. So it's getting rejected off that little minor support. This is still unconfirmed in terms of a breakdown. I still think ultimately it probably does confirm. But again, as of the chart, yes, this is minor. So, and this is a good little distinction. I'll leave you guys with this today in the game plan. When you don't confirm, here you broke below, but it hasn't confirmed to the downside yet, but you're still below this trend line. It's just unconfirmed. When it's unconfirmed, it's minor resistance, but still resistance. Once you confirm, it becomes major resistance. That's the difference maker right there, okay? So just a little tidbit on that front. On that note, guys, I'm going to come back to center screen here. I got to get to my trading floor. The Apex Live day trading room is just about to start. Let's see what we got here. Woo! There we go. We got the club back. So let's see what we have, guys, on the docket today. Lots of good action. Don't forget, lots of things to watch over the next couple days, including the Micron earnings as well as the PCE data. I will be coming to you live, not only from here, but starting Thursday and Friday, I'm going to be in Vegas, and I will be coming to you live from Vegas, the game plan. I'm not missing a beat. No one here at Verified Investing is missing a beat. We're still going to deliver you guys the best insights and technical analysis any website, any media outlet out there does. We're just giving it to you pure and simple. No narratives, no BS, just the game plan for you to trade off of. You guys have a great one. Take care. I'll talk to you soon.